What I love about Boca is it creates this magical ecosystem where people come and you learn things from others. Like every time I come each year, I learn something new. So there's all these things that are happening. So you bring this international petri dish together, and sometimes the magic happens. So we try to set out the framework for solutions to start to be talked about and to germinate. But you never quite know where it's going to go. So once we create the ecosystem, we sort of stand back and let the magic happen.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abax Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter markets are here.
Welcome to Scenes from Boca 2026, the FIA Global Cleared Markets Conference. I'm Dave Greeley, Chief Economist at Abax Technologies. Smarter Markets returned to Boca, where we partnered with the FIA for our third year, sitting down with who you need to meet to bring you what you need to know. We've compiled a selection of those 13 interviews into this special episode of Smarter Markets. If you would like to listen to the full interviews, they're available on our website, smartermarkets.media, on the SmarterMarkets Presents media page. They're also available on our second podcast channel, SmarterMarkets Presents, available on all major podcast platforms. Our guests in order of appearance in this episode are Walt Lukken, President and CEO, FIA. Yuval Rooz, Co-founder and CEO, Digital Asset. Shahrawat, Crypto and Digital Assets Lead, Bloomberg Intelligence. Stuart Connolly, CEO, Cloud Margin. Travis Schwab, CEO, Aventus. Alan Green, EVP and Managing Director for Futures and Options, Trading Technologies. Anthony Crudelli, SVP, Ninja Trader. Joe Rea, CCO, Abax Exchange. Chris Tripp, GM International, Ninja Trader. Adrian Meir, CEO, Avenir. Alan Guarino, Vice Chairman, Korn Ferry. Keith Todd and Joe Schroeder, Chairman and Chief Business Transformation Officer, Sapphire Technology Group. And Josh Crum, CEO, Abax Technologies. We hope you enjoy these scenes from Boca 2026, the FIA Global Cleared Markets Conference. Walt Lukken, President and CEO, FIA. It was great to see your opening of the conference yesterday, where you were really setting the agenda and raising the opportunities and the challenges the industry faces in the year ahead, and brought up how we need to face it in the spirit of your Indiana Hoosiers. So I was hoping for our audience, you could just tell us a little bit about how do you see the year ahead shaping up and how do you want the industry to approach it?
Well, we're facing incredible innovation that's happening in our industry. And so sometimes that can feel overwhelming as we think about change and how our industry copes with that change. And so yesterday's speech was about getting back to first principles of what markets do. I used the metaphor of Indiana's national championship and how Coach Cignetti brought in trust, fairness, and integrity to his team that helped to build a winning formula, and that those apply equally to markets. Markets need trust, they need fairness, they need financial integrity in order to survive. So as we face things like prediction markets, crypto, all these new models and market structure that are developing, those first principles are incredibly important. So we tried to set the theme for the conference, and it's nice because you start to hear that theme reflected back throughout the panels, and today's going to be another excellent event.
Looking forward to it. And as you said, there's been so much innovation to talk about. There's the move to 24/7. There's prediction markets, there's tokenization, and the convergence between decentralized finance and traditional. when you look at the state of the conversation, is there a gap between kind of the conversation on the stage and the operational reality? And how do we start to close that? Where are we in this process, do you think?
Well, I think certainly people are aware that there are things that need to get addressed, especially 24/7 as the markets start to innovate quickly. And we have to close the gap because a lot of markets are thinking through on the execution side, but not necessarily on the back office side of how we make sure the markets stay safe after a trade is executed. So that was the point of our paper that we put out last week is it's going to happen. It's innovative. It's brought on by customer demand. But with that, there is a need for responsible innovation to making sure that the clearing systems keeps pace with 24/7. The payment rails keep pace with that. And so there's some wood to chop there for the industry, but the issues have been identified. It's a solvable problem. And I think we're having a roundtable today on that topic to try to see, what is the low-hanging fruit where we can start to advance that issue.
I like that phrase, responsible innovation, and being around the conference, bringing in people from so many different backgrounds, so many different types of companies. Where do you see the state of how everyone's working together and learning to understand each other's languages and understand each other's responsibilities to the markets?
What I love about Boca is it creates this magical ecosystem where people come and you learn things from others. Like every time I come each year, I learn something new. And yesterday, I learned about Prop AMM, automated market making, that is a new phenomenon in AI in our world. So there's all these things that are happening. So you bring this international petri dish together, and sometimes the magic happens. So we try to set out the framework for solutions to start to be talked about and to germinate, but you never quite know where it's going to go. So once we create the ecosystem, we sort of stand back and let the magic happen.
Yuval Rooz, co-founder and CEO, Digital Asset. Well, we had you here, I think might have been 2 years ago at this point, and I was just really curious, what's been going on at Digital Asset since then?
But a lot. I probably most notably, everybody today is talking about equities, so tokenized equities. So I would say probably the most important thing that have happened since the last time we talked are the announcement by the SEC that they're giving a no action relief to the DTCC, US equities and US treasuries, and Canton, the network that we launched, being selected as the first to do it with them.
And just glancing at the conference program, it's easy to see lots of the discussion of 24/7 markets, tokenization, convergence of traditional and digital market infrastructure, kind of in ways that we haven't seen in earlier years at Boca. And I'm curious, between the no action letter you mentioned from the SEC, where do you think we are in this transition from traditional to more digital assets?
So I think the transition is already on the way. And definitely that is true for the retail side of things. But even when you start thinking about perp markets and just crypto markets, you see a lot of institutional adoption in those markets. So I think that where we are in terms of the users, we're already there. Now the question is bringing other asset classes into the technology, and that's the DTCC is a very big one, but we made an announcement with Euroclear around gilts, Eurobonds, Eurogovies, and you'll see more asset classes. So I think that the transition have already started. It's now really starting to bring more asset classes and also new type of players like the buy side that is not just going to issue assets on those rails, but is also going to become an active market participant.
And what do you see as the biggest challenge to get the buy side to come in and to expand across more asset classes?
Yeah, so I mean, it really depends which buy side. If you think about the hedge funds, they are usually, at least the large one, are very sophisticated and very much on the cutting edge of technology. So it's much easier to bring them on board. When you start thinking about the more large asset managers, at the end of the day, what you really need to do is you need to show that the service providers that they use, whether it's the custodians or the prime brokers or other intermediaries that are helping them participate in markets, you want to see them participate first, because then the buy side could use their services. So for example, one of the things that we proved with the DTCC is that the FCM can now allow their buy-side clients to do collateral substitution 24/7. That's a huge problem for the buy-side, but they need the FCMs to solve it for them. So we really need to onboard some of their service providers into the network, get their system to integrate to the network, be able to process transactions, and then they can onboard their clients.
Just thinking ahead, if you were to think of coming back here next year, what would you want to see accomplished over the next year in the space?
Yeah. So, just maybe anecdotal point. Today, we do close to 30% of the daily volume in US Treasury repo in the US, which is pretty significant. What I would like to see is that some of those prime brokers that are part of the DTCC initiative have been onboarded and are doing a significant part of their movements of collateral on Canton. I don't have a percentage in mind, but what I would like to be able to say is those businesses that were early adopters have actually onboarded customers and are doing a decent amount of their daily business through the network taking advantage of these digital instruments.
Shahrawat, crypto and digital assets lead, Bloomberg Intelligence.
So I just started at Bloomberg about a month and a half ago, and I work in our market structure team, and I basically look at everything that's happening on the blockchain, crypto, digital assets, decentralized finance, all the wonderful things that are being built on top of it, like stablecoins and tokenization of assets on behalf of the Bloomberg client base, which is 400,000 terminal users all over the world.
And certainly there's been a lot of conversation around tokenization this week. Is that what brought you down to Boca this year?
Well, actually, I've been coming to FIA Boca for over a decade, way before anybody was talking about blockchain. I think 2-3 years ago, I've been looking at the crypto and blockchain space for the last 5 years. I was an investment banker raising capital and advising companies in the crypto space for the last 7 years for Rooz Securities. So I've been in that sector, but I didn't think that we'd be talking about tokenization and stablecoins at the FIA as much as we have been, this year. So I wouldn't say I'm here because I care about the capital markets and want to look at what's going on in that space. But obviously this year, blockchain as infrastructure and rails on which capital markets can operate has been a big topic area. And that's a great part of my interest here.
And when you think about its use in institutional level capital markets, what do you think the biggest challenge remaining is?
I think the biggest challenge right now is just the public perception again, like the folks that are here, get it, but 80% of the industry, I would say, doesn't really quite, when you think about, you mentioned stablecoins and tokenization, they immediately think about Bitcoin and saying, well, Bitcoin is halved, so therefore, what's the big fuss about it, right? And I think you've really got to roll up your sleeves and care to understand the space, to recognize that, again, as I started off with, that all that Bitcoin did was demonstrate that the underlying technology, which is a blockchain, actually works. So I think the number one problem is just the lack of understanding and the conflating of concepts. But I think the industry is coming around. The fact that you have got exchanges, you've got regulators, Mike Seelig, the chairman of the CFTC, today Paul Atkins, the chairman of the SEC, regulators talking about it. You've got exchange leaders, like we had an exchange leaders panel in the morning, from CME, Terry Duffy talking about it, Nina Friedman. So that gives a lot of people faith and confidence that this technology is for real. And we're beginning to see real life use cases of infrastructure that operates on traditional rails being ported over onto blockchain rails as well. One more framework that I just give people to understand that's helpful is coming back to basics. You think about what are the 4 basic financial activities that all of us do in our lives? There are 4 basic things. Payments, you got to pay people for things. Lending or borrowing, you've got investing, and trading is one element of that. And 4th is insurance. Those are 4 basic fundamental financial activities. Today, we've seen examples of how blockchain is used for payments, which is stablecoins. The investing and trading piece we're seeing with what's happening at this conference. There'll be opportunities, and there are examples, early indications of how blockchain technology can also transform insurance, which is not something that obviously we talk about here. And the 4th leg of stool is lending and borrowing. And that's where staking and lending happens. So basically, the actual activity is not changing. but you're just moving those activities to more efficient rails, which is what all this hullabaloo about blockchain is about.
And looking ahead to next year, what would you really like the industry to make progress on over this coming year?
Two fronts. One is seeing the CFTC and the SEC actually execute on the agenda that they laid out, which is a very pro-innovative, pro-innovation, pro-crypto thing. So seeing how that plays out over the next 12 to 18 months. And second, I would say was, the DTCC no action letter, what NASDAQ and New York Stock Exchange are doing in coordination with the DTCC, all of that is going to come to fruition over the next 12 to 18 months. So love to see the progress in that direction. I think the industry is saying the right things. It's a matter of how do we sort of address the teething troubles in that? And hopefully this time next year, there are real proof points that we can point to things that the SEC, CFTC have done that have resulted in net improvements in the sector, and to see if folks like DTCC, the exchanges, basically start using blockchain infrastructure to do some of this tokenization stuff that they have plans to do.
Stuart Connolly, CEO, Cloud Margin. And when you talk about the assets that they can use for collateral and margin, what types of assets are you talking about? And is that changing?
Yeah. So look, I think the majority is what you would expect for large institutions who are trading in the derivatives market. So from govy bonds, cash, all forms of cash, multi-currency cash, going down into, depending on what sort of agreements, bespoke agreements they've got with their end clients or the clients have with their dealers and liquidity providers. It can be things like equities. It can be some forms of commodities. Look, I guess one of the big themes that we're seeing here at this conference is tokenization. So tokenization of assets. So look, I think that's something that we will start to see move a little bit over the next 12 to 18 months. We're participating in a large industry, what they're calling a sandbox, what I call a proof of concept, which is tokenizing money market funds. So I guess in the future, we'll expect to start seeing more expanded pools of liquidity and collateral being utilized. I think that's highly sensible for the industry to do that in a world where high quality assets are always constrained and the utilization of them is kind of needed and required in lots of different places. Making more things eligible makes a whole heap of sense. But also, I've kind of watched this movie a few times of the industry wanting to adopt tokenization of assets, for example. Like, we've been on working groups for probably 6-7 years, and 6 or 7 years later, there is still no tokenization of traditional financial assets. Something feels a little bit different this time. It feels like there's a bit more momentum behind it. Feels like it might happen. But if we're sitting here in 12 months' time and it hasn't, I won't be hugely surprised, but I would be a bit disappointed.
As someone who kind of comes from the more traditional margin collateral side, what would your advice be for the tokenization side? Like, what do they got to make sure they get right and they might not be seeing around the corner?
I think tokenization of assets, everything in financial markets usually kind of comes back to liquidity, right? So tokenizing something that doesn't have any kind of deep pool of liquidity behind it, doesn't seem like a very sensible thing to do unless the tokenizing of that asset is going to create a new pool of liquidity and it will therefore become, a highly liquid asset, right? Because the last thing people want to post up is very illiquid assets because you will get a very severe haircut on those. And so the value of what you are posting is going to be discounted very, very heavily, which means you're essentially going to be over collateralizing to a very great extent. So look, I think tokenizing very liquid things, as I said, I like what I'm seeing in this industry initiative at the moment where they're talking about money market funds being tokenized, because money market funds are deeply liquid instruments, right? It's cash and it's US Treasuries. It's very short term. So it's kind of a cash substitute. It's highly liquid. But today, those funds and assets are locked up and you are unable to rehypothecate and reuse those assets. So bringing those assets in gives you a whole new liquidity pool, to essentially use and pledge as collateral against all of your other activities. So for me, that makes a whole heap of sense. I think, ultimately, looking at the liquidity and liquidity behind them, what's it going to buy you by tokenizing those assets? I know there's a lot of talk of tokenizing US Treasuries. US Treasuries are super liquid. They move around the market relatively frictionless. Bringing new assets into the collateral pools feels like it makes a whole heap of sense. In terms of all the rails and the infrastructure this happens around. Again, we've been talking about blockchain technology for, it feels like forever, and we've never really found a great large-scale use case for it in financial services, it feels like, yet. So there's lots of pockets where it's been explored, but it hasn't really kind of landed and taken hold of anything in sort of, the deeply regulated part of financial services. I don't think the rails will alter significantly, certainly to start with. And, you can tell by looking at me, I'm getting kind of old. I've been in this industry a long time. Our industry moves slowly, right? Financial services is a relatively slow moving industry when it comes to adopting new, bold technologies. And that's partly because we operate in a world where there's lots of legacy infrastructure, but also it's a deeply regulated market, and you don't want to do something that is going to present any regulatory or outsized financial risks to your business. I don't think we'll see anything accelerate out of the gate, but I do hope we start seeing some of this innovation stick.
Travis Schwab, CEO of Ventus.
Over the last year, we've been focused on kind of the two big areas, prediction markets for us. So we have lots of clients in that space and kind of navigating all of the interesting kind of fluid environment of the prediction markets. And so that's been prediction/information. I want to make sure I'm using the right terms. And then we are rolling out our product called Frank AI. So funny enough, AI was all the conversation last year. This year, no one cares about AI, and now they're talking about prediction markets. But for us, Frank has been a really exciting development for our clients, and we're kind of this deliberate rollout and seeing what the uptake is for that. And so that's where we've been spending our time.
And you said a lot of tokenization represented here this year, lots of conversations about 24/7 trading and clearing, and that whole convergence of traditional finance and the DeFi crypto world. When you look out, where do you think we are in that transition?
Still very early. And so the pace, I've been trying to kind of think about how to think about the pace of change. So I think these changes in market structure and products and regulatory structures have been happening since capital markets were formed thousands of years ago, right? If you're trading vases of oil versus tulips versus tokens on something, creating market structures is a movie we've seen over and over again. But is the pace of innovation that's happening faster? Probably, because the tools that are underpinning these markets are more democratized. And so more people have access to it and are pushing the envelope forward. But it's still, the plumbing has to be built, and it takes time to build that plumbing.
And when you think about the tokenization and the 24/7, sounds like the 24/7 is done in terms of plumbing and what you provide. What are clients coming to you for now?
Outside of prediction markets, and that opens up a very interesting level of data integration. And so the focus of prediction markets is insider trading, insider dealing. And so how do you suss out insider dealing in a market that is extremely fluid and might not have anything to do with the actual trading going on? And it's, if you know Taylor Swift, you're Taylor Swift's best friend from high school, and you know when she's going to get engaged, you go on, create a contract, and you bet on it. Does the market care? Do we need to suss out that level of insider trading? Is it material? And so do you have a duty? Like if I work for the Defense Department and I know that things are going to happen in Iran, for instance, you have a duty not to report those things. And so there's a lot of legal regulatory issues that we need to kind of work through and wade through. And for us, we're trying to be good stewards of this marketplace. We have a lot of clients in this space. We want to bring vendors together. We want to have a very open dialogue with the regulators and the various participants, try to bring vendors together so that you can build integrity into these markets. And it's challenging. And so I think it's a very interesting data problem. It's a very interesting regulatory problem. And for us, we love to be in the middle of those issues.
And as you said, being here, the whole ecosystem's represented. You have regulators, you have the vendors, you have the exchanges, various market participants. What types of folks are you most interested in talking to this week?
I think you hit it, is that cross section. We want to make sure we're covering as much ground as we can because you have access to so many different constituencies here. I think it's important for us to try to cover that. So I think over 3 days, I have 30 meetings. And so it is a lot of ground to cover, and we're trying to cover as much as possible. We're going to have a big event in April called Forward, where we're hopefully bringing together a very similar group of constituencies to have kind of a working panel, a working confab where we're going to have output from that, where it's best practices or, where you're not just listening to three people up on a dais talking about various issues and all agreeing. You're going to be asked questions to say, okay, how does this impact your business? How can we move forward? And we're going to try to publish some very interesting data out of this. And so we need actionable things coming out of these processes, and we're excited to try to get that going.
Alan Green, EVP and Managing Director for Futures and Options, Trading Technologies. Thanks for joining us, Alan. This is terrific. I'm just curious, since the last time we were able to talk, there's so much going on at the conference, prediction markets, tokenization. Last year was AI. What are you doing at Trading Technologies to keep up with all this?
So I think for us right now, prediction markets is the thing of the moment. Being honestly, if you'd spoken to us a year ago, even 6 months ago, we'd have said it's not really an institutional thing. And we're very much an institutional player rather than retail. But that's definitely changed. We had a little panel yesterday where a couple of people were coming up and speaking, and we are seeing now, Kalshi, I think, got a significant amount of institutional trading on the market. Rothera is coming up as being a new institutional-only prediction markets exchange. And of course, CME has got their contracts out there. So that's something that we are supporting. I would say at the moment, it's still early days. Nobody's completely sure how that's going to play out, but definitely that's been the big change, at least, market-driven change that we've seen over the last few months. Certainly, I need to talk about those prediction markets again, because I was not expecting that to be such a topic of conversation. But I think going beyond that, really, I think just the increased globalization and also hearing a lot of our customers go into a multi-asset world. I think this conference, maybe 20 years ago, was certainly a global conference. It's always been a global conference. But I think you would have had a lot of people who are only operating in their one region, whether that's the States or whether that's Vietnam or wherever it may be. Now I think we're seeing that most players have got some kind of global strategy where they're sort of trying to look out into other countries. And again, not all, but most players are looking beyond just futures and options. Many people obviously have been in other asset classes for a long time, but those that haven't are sort of looking beyond and seeing how can they go into foreign exchange, fixed income, cash equities, equity option type of products. So I think that was happening a little bit more than I was expecting across the range of people here.
And I imagine that also changes what customers are asking you for at Trading Technologies.
It does. And what's really satisfying for us is that does fit in with our strategy. We, I think, expect the market to move away from a purely asset class driven approach of you trade futures here, you trade fixed income there. I think people are saying, look, I'm a rates trader. I want to have one screen. So I think that's something that we expect to happen. That's what we're building for. And yeah, we're beginning to see that demand coming through slowly, but we're beginning to see it.
And when you think ahead, getting ahead of ourselves to next year, what would you like to see the industry progress on over the next year to really help integrate a lot of this innovation and take us in a good direction?
So I think one thing, coming back to the prediction markets, if we can get to a model that allows margin rather than fully funded. We bought just before Christmas a company called Open Gamma, and they are really focused on margin optimization for better use of capital, which really fits in with trading technologies because, more available capital allows more trading. And I think that at the moment, one of the barriers to some of those event contracts is that fully funded model. So if the industry can, in a safe and regulated way, find a way to do that on a margin model without being risky leveraged, but just being, sensible about it, I think that's going to open quite a lot there.
Anthony Crudelli, SVP, Ninja Trader.
Boca is interesting because I would say it's an event where it's really different from all of the other FIA conferences. I think it's the most international. I think it's the one that pretty much you get everybody here. I mean, we just saw Terry Duffy talking up there with Tarek. You've got Jeff Sprecher. You've got all of the exchange leaders here. And I think that makes it very unique. And really everyone in our industry finds their way here at some point. And so it's good to come here and get the pulse of what's happening in the space. I think that this conference every year kind of sets the tone for what people are going to be focusing on. You get to see what everyone's doing, what are the topics of conversation. And this year, I think it's tokenization of stocks. The big deal with Kraken and NASDAQ's been a big focus of conversations here. Prediction markets, event contracts are a big focus. And the evolution of the retail trader. I've been coming here for a long time and retail trading was not talked about. Now it's front and center.
And you were moderating a panel yesterday, and I'm curious, any part of that conversation, well, what was the conversation? And was there anything that came up during it that surprised you or, stuck with you?
So the conversation yesterday was with CEO of Ninja Trader, Marty Franchi. Then you had CEO of Kraken, Arjun Sethi. And then you had JB McKenzie from Robinhood and Mark Ullmans from CME Group. And with that group, it was really about more of the evolution of the retail trader. Again, we're at a conference to where I've been coming here for over a decade. Retail was not really discussed here. I came here, did what you guys are doing, talk with people in the audience through my podcast, Futures Radio Show. And it was hard to get people to really talk about retail. And then several years ago, micros took a big splash in the space. Obviously, crypto brought in a lot of retail. But now we look at it. What's everyone talking about today? Prediction markets. And we're talking about crypto, tokenized stocks. We're talking a lot more about retail products and how they fit into the equation. And when I look at everything, what we talked about yesterday in that panel was like how those different companies are finding traders where they are in their journey. So now it went from a revolution to an evolution. And then all of these CEOs and what the exchanges are doing and finding ways to capture the best products or provide the best tools or software or technology for where a trader is in their journey, I think is something really interesting. And that's what the topic of conversation was.
And not to get ahead of ourselves, but as you think ahead to next year, what do you think is important for the industry to get right and to be focused on over the coming year?
I think the regulation of what's going to happen with prediction markets is going to be interesting to see where we are in a year from now. We're going to go through midterms and you wonder what kind of regulations change. Again, not my world, but you wonder how that impacts everything we're talking about today. And I'm going to be very curious to see how the tokenization of stocks, the Kraken and NASDAQ, and how that looks and what that does. What's the ripple effect of some of these things, right? Like what do other exchanges do? What are other people in this industry do? Again, there's this evolution. We're not talking about AI right now, but I think that everyone's kind of figuring out what AI means, not only for their businesses and how they run their businesses, but what does it mean for traders? I wouldn't be surprised if AI becomes a more stronger topic of conversation next year. I know that we're doing some cool stuff at Ninja Trader for traders to be able to utilize AI to build strategies, build indicators. That to me just becomes something that becomes more of a focus next year.
Joe Rea, CCO, Abex Exchange. Yeah, it's been interesting in the panel conversations. As you said, it's prediction markets, tokenization, 24/7 clearing. I was sure you've been coming to these for a long time. How do you put that in context? Because it certainly seems like the prediction markets are the shiny new thing this year.
They are. This is my 26th time here over the years. It certainly has changed a lot in the focus on the different products, the different exchanges, the different risks that's in the marketplace. Certainly prediction markets are new. It's really interesting to see the firms that are here that have never been to an FIA conference before. So I think it's still early days in these products. I think some of the incumbent exchanges are looking to make that their new shiny object. But for us, I think we're really looking to see what
we can do from a traditional perspective in commodity futures versus some of the financial markets that are out there.
And on the technology side, of course, a lot of conversations around it. Where do you think the industry is as a whole, though, in terms of having the operations and the infrastructure to meet the aspirations for tokenization and 24/7 clearing?
It's a big topic. 24/7, we just heard that panel this afternoon. There was a lot of debate around, do we need to pause? Is it the right thing? Is it too much of a strain on the resources at trading firms and clearing firms? How do we manage the risk over a weekend? So sounds great. 24/7 sounds great, but there's a lot of things that have to be figured out before we really get there. And I think a lot of it is managing risk and managing the human capital around that. That's a big part of it.
That's great. When you came this year, who did you want to be talking to? What sort of participants in the ecosystem?
It's always for me clearing firms, right? This is always the big Super Bowl of clearing and risk management and the futures industry. And I think because of some of the events that are happening around the world right now, there you see probably less of a participation from clearing firms this year. They're here, not as a big force as they used to be, but certainly we've had some great conversations with our current clearing firms and some of the new ones that we're looking to bring on board.
When you're thinking from the context of the clearing firms, what is their attitude, if there is a general one, towards a lot of the topics being discussed, whether it's 24/7 clearing or tokenization? Are they embracing it? Is there skepticism?
I think that's still a wait to see for them. I mean, certainly the incumbent exchanges are putting a lot of pressure on clearing firms to adopt this. I think they, as a clearing firm, again, it's all about managing risk. And so they have to look at the resources they need to build their system so that they can handle 24/7 clearing or tokenization or stable coins or the things that come around prediction markets. Those are things that are new. And I don't think that everybody's really had a fully thought out answer as how they solve those problems.
And as Boca 51 starts to wrap up and we look ahead to 2027, what would you like to see the industry make real progress on over the coming year?
The things that we see are more of an adoption of new markets. Certainly our markets are new markets. They don't compete with the existing exchanges. There are a lot of customers that want to trade our markets. We don't want to disintermediate clearing firms. And so we want clearing firms to really embrace these new markets as better tools for risk management that they need to get on board with, because trading firms are going to find a way to trade it, no matter who they go through. So that's an important part of our ecosystem. Again, we're fully embracing the clearing markets and the intermediation markets, and we don't want to, get in the way of clearing firms. So that's an important part of our business.
Chris Tripp, GM International, Ninja Trader. So we had Anthony on as well. But I've heard this is your first Boca. What do you make of it so far?
Yeah, first ever Boca. It's quite the experience, really. So joined Ninja Trader 8 weeks or so ago to head up their international expansion efforts. Everyone on the team was like, you have to come to Boca. It's an amazing experience, great place to meet people, hear about what's going on in the industry. It's kind of very relevant to me as I'm kind of getting my foot in the door, starting to understand how we're going to attack things internationally. But seems to just be a great place where people come from all around the world, all the different exchanges, brokerage firms, to kind of meet up. And I think I've got a lot done in the last few days, more than I would have done kind of sat back in the UK. So it's been really great.
Fantastic. And much of the conversation this week, it's been 24/7 markets, tokenization, prediction markets, a lot of focus more on the retail trader and bringing some of that into the institutional markets. I was curious, when you kind of listened to the conversations, went to meetings, where do you see maybe some of the gaps between what's being discussed on stage and where traders are at, where the markets are at in their own development?
So I think the 24/7 piece is a really interesting one for me, thinking about like international markets, because at Ninja, we want to try and get into as many different markets as we possibly can. There's such high demand for US products, regardless of kind of location around the world. So having those be available 24 hours a day, kind of 7 days a week, would be huge for us kind of on an international basis. And especially like the tokenized element of that is really interesting as you start to think about how capital ends up getting deployed around the world, kind of cross-border instant settlements, so people can kind of have greater access to their liquidity across a variety of different assets as well. So all of those topics are like super interesting for us. And like something else that we've really been focusing on whilst I've been here is all about how do we just increase the accessibility of global products as well, because US products is one thing as we think about going internationally, but unless we've got some of those local products that are coming from other parts of the world, we won't even factor in the considerations out for some of those retail customers. So we need to make sure that we harness all the powerful kind of innovation and everything that's going on in the US, but then we're also factoring how do we proposition that through a local lens as well.
I think often when people think of 24/7, if you think of it from the perspective of just being in the US, you might think, well, why do I need to trade at night? Maybe I want to go to sleep. But from a global and from an international perspective, it's always daytime somewhere. How important is that 24/7 to having real international markets?
It's incredibly important because the demand for the US products is there internationally. Like we see that today. And so giving somebody access to that isn't like 2:00 in the morning, their time, where they're kind of like having to stay awake or having to kind of rely on stop losses and things when they're asleep and kind of having that anxiety associated with it, but having the markets open, giving them way more control around their trading and their risk management and things like that is going to be really important for retail clients. And I think once we see more of that 24/7 kind of rollout, the adoption around the world will increase not only the products that we have today, but some of the kind of newer, innovative products that are starting to be spoken about.
Adrian Meir, CEO, Avenir. We're glad you chose to speak with us. Maybe for guests who haven't met you before, what do you do at Avenir Technologies?
Well, we're a small markets infrastructure provider. So basically, we're into markets technology. We build exchanges. We have a full technology stack from trading, clearing through to settlement. And we have some risk management tools. So we provide technology to emerging markets and some of the more sort of tier 2 and tier 3 providers. But for somebody who's been in markets infrastructure nearly my whole career, if I'm really honest, coming to Boca for me is one of those opportunities to land and talk and reconnect and have these discussions regardless of where the Avenir technology is. It's an opportunity to know what's happening in the markets.
That's great. And as an infrastructure provider, and as you said, so much of the conversation this week is prediction markets, tokenization. From an infrastructure perspective, how prepared are we for these types of innovations, or where do we need to be doing work?
I'd like to think we are prepared. Like if you look back 20, 25 years ago, everything feels a bit scary. Like going to an electronic trading system felt scary. Having data vendors sending out information over back in the day on, 5 meg. We evolve really quickly and the market will tell us how to evolve. And the thing that we're seeing with that sort of the TradFi DeFi piece is that we've got really strong sort of roads that have been already paved by classic traditional markets. And that infrastructure is solid. And we are seeing really good conversations happening with the crypto people, and they are coming to the likes of people from a traditional markets infrastructure background and saying, hey, it's kind of like, well, how do we work together and what is it we need? So we're having conversations. We've got a really, really good, strong CSD solution, and that's becoming really important. Like, where is everything being kept? Is it really strong? How is it? Is it solid? So we're having conversations with a lot of those as well. I think it's important that people embrace it. It's scary sometimes when it feels like it's an unknown. I've had a few people I've seen walk out of these sort of doors and be like, oof, this feels a lot. But I think I can just get really excited about what's happening in the markets.
And for people who are used to hearing more from the large, predominantly US and European exchanges, you said you work with a lot of exchanges kind of throughout the rest of the world. What's the pace of innovation there? And are there interesting developments in more local or regional exchanges?
Such a great question. And yeah, you'd be surprised. I think that for somebody who personally spent a lot of time with large exchanges in Europe for many years, coming out and actually looking at the way that they're approaching their new product innovation and what they're doing in terms of actually building liquidity is quite interesting. We're working closely with exchanges who are really focusing on changes that are coming down the pipe from a regulatory perspective. So we've got people who are saying, look, I've got risk management tools that my team can use here at my exchange, but how am I allowing the transparency back to my participants so they're equally seeing that, so that they're prepared when there's a margin call. They're not like, oh God, that it's a really important piece of actually bringing the markets closer together. So that's happening at pace with the people I'm talking to. And sometimes it's happening more at a larger, we should be doing that. So you'll go to a conference and IOSCO will be saying this is what we want. But actually some of the smaller markets who are more agile and can make changes really quickly, they're kind of doing it. Yeah.
And when you look ahead to next year, not to get ahead of ourselves, but what do you think would be fantastic for the industry to be focused on and working on? What would you love to come back here next year and be like, oh, I'm glad we made progress on these issues?
That is a great question. Well, again, I hate to say, going back to what the leaders were talking about before, and I know there's another one tomorrow, I would like to see a little bit more of a synergy across the table around the main problems that we're trying to address. And rather than it being just sort of like in one region and another, I would like to see a little bit of a collective view on how that would work. And I appreciate that. I mean, as somebody who puts technology into a number of different exchanges, everyone's got different regulation and requirements and products, and I appreciate it can't be the same. But sometimes it would be nice to think that we're kind of coming together and actually looking at a collective view on what would be the right thing for us to be doing right now, because it feels like a lot of wrong things are happening outside of our space. And just generally speaking, get behind what is evolving in our markets and get excited about that too. There is a space for everybody in this market.
Alan Guarino, Vice Chairman, Korn Ferry. What do you see as the biggest challenges companies and their leadership are facing right now?
Well, the playing field itself is the challenge. It's been evolving, I would say, over the last 15 years. So because of what I call pace, complexity, and globalization, PCG, the world of work today is a professional sport. And if we think of it in a metaphor of college sports, 15 years ago, work was a Division II sport. So how many athletes can look really good in Division II? A greater percentage than can look really good on a professional field. And so what's happened is that work, because of pace, complexity, and globalization, has become so difficult that companies are screaming for exceptional talent, but exceptional talent's hard to find. And the other thing I talk about is, CEOs don't lead companies anymore. Teams lead companies.
Absolutely. When you talked about business is now a Division I sport.
Or the pros.
What does it take a listener who wants to play on a pro team in this? What are the skill sets or the mental attitude that's needed to play at that level today?
If people didn't know better, they think you set me up with that one because it goes right to the book. So I wrote Greatness Code, and it was a bold statement in the dedication to take a bit of an edgy tone and say, I wrote the book because it's dedicated to people who work for toxic bosses who suck the oxygen out of the room and get in the way of them achieving their personal greatness. Because, as I said, leadership is hard today. So I do think we have a crisis in leadership. So your question about, well, how does somebody persevere and achieve in today's environment? Well, if they have a great boss, terrific, follow the Greatness Code formula and they'll do really well. And if they don't have the greatest leadership environment, follow the Greatness Code and you'll push through it. So what I tell folks is there's 5 muscles. I call it SCRIP: stamina, courage, resilience, persistence, and passion. Okay, so those 5 muscles developed early career, mid-career, and at peak career will do you well. And some people call it grit, and you'll get this far. And that's fine. The other thing you need, and the other secret sauce, is this thing called social capital. It's the network of people around you who set you straight, the people who talk well about you when you're not in the room and support you in the organization, people who mentor you, and all those other people that help you connect dots that will enable you to achieve the other mile, the last mile of your greatness objective. So if you have both working, the 5 Qs plus social capital, you'll get here.
And I imagine over the course of your career, you've worked with a number of companies that have gotten it right. And that's kind of the North Star for the companies that want to try this approach. If you think ahead, like if some company says, I want to go down this path, what's the light it can be carrying them to? What can they look to get out of it?
I mean, at the end of the day, transform or die. So there's a survival instinct that certainly drives it. One, I will tell you that I've been frustrated over the years in finding leaders that are not actually playing to win anymore. They're just playing not to lose. I get it intellectually when we look at the difficulty today of making big bets and taking risk to win. And we look at, quite frankly, something as mundane as our compensation models that maybe reward not losing adequately enough that the incentive to try to win isn't there. So there's a whole bunch of forces at play, not the least of which is in a high speed pace, highly complicated, complex global world, which we started the conversation with 10 minutes ago. Boy, it's hard to make big bets and try to win in that environment, right? So you're up against a massive set of challenges that may dissuade you from trying to win. Well, fine, then play really hard not to lose and do the best you can, but I'd rather see people play to win.
Keith Todd and Joe Schroeder, Chairman and Chief Business Transformation Officer, Sapphire Technology Group. And this is perfect timing because you both had a big announcement this morning. Could you talk to us about the big announcement this morning?
So the announcement of this call was Sapphire Technology Group has, in a sense, two initiatives. One is on, and Joe will talk about it maybe in a moment, leadership and shared experience of how to create sustainable growth companies in the technology space. The second is actually a partnership with Charles Bank, where we are co-investing in transformational projects. The common link is the Sapphire Doctrine. This is an approach to how to run companies successfully that's developed, frankly, over the last 25, 30 years, evolved by a team of us that come together. And we've had great success in the past, and we believe it can be propagated much more widely.
And what's the key to the Sapphire approach?
I think the center of gravity is that you need to have the right culture and leadership. There's a very simple word called authenticity. Yes, you must have a vision as to where you're going, but behind that is the unification. And I'm sure many of your listeners out there will just reflect on organizations they've been part of where, without being too rude, they're dysfunctional. There's no alignment behind a single strategy, with a single culture, with a single mission, with a single energized passion to deliver what's required.
And you mentioned how the cycle moves so quickly now. And I'm curious because last year, the conference was all AI conversations. This year, it's prediction markets and tokenization and 24/7 trading. How do you advise companies to either try to balance seeing through what's the hot topic at the moment versus knowing when they need to pivot?
So, and I'll let Keith speak to this as well, but leaders have fundamentally two roles, right? One is seeing around the corners about the things that are legitimate. And two is balancing delivering results today with driving the change that needs to happen basically tomorrow. And so I think that the leader's job is getting the organization comfortable with that sort of dynamic and things. And that's really what the conference, frankly, is about. I think that, like, with your comment on AI, people have to really get comfortable with AI in that it was a topic last year, but this year you have to get comfortable with the idea that everything that you do today to become relevant might be irrelevant in 6 months and you got to do it again. So it's like a perpetual transformation machine.
Yeah, I think the way to think about this is in sort of three domains. There's the immediacy of where a company is today. There's the transformation to get it operating today, but it's a future roadmap. So to your point about whatever it may be, whether it's blockchain, prediction market, any of these topics, they're part of future roadmaps. It shouldn't fundamentally change what's being delivered today, but you have to be aware of them and take advantage of you, without any doubt. The big danger is firms that change their strategy very often generally fail. A strategy is a very solid, clear view, not based on any one technology, not based on any one particular, in the capital market, form of trading. Yeah, it's there for the long term.
And how important is it to have the education piece along with the investment piece? And do you see those as really working together?
They're totally linked together. It's the same philosophy, but it was a deep belief is around some of these principles. Business is a team game. It's not an individual game. It's a team game. The alignment of team, as I was talking about earlier, behind a common vision, is very, very, very powerful. But it's also a game, and I mean this professionally, not frivolously, where all stakeholders should win. This is not about making PE profitable and successful. It's about the team members feeling highly motivated and fairly rewarded. It's about the communities you operate in really wanting you to be there. Customers getting value for money and enjoying doing business with it. And investors, yes, they should get better than market returns. So they're linked together by this whole philosophy. But we believe so strongly in this, we can't invest in enough companies. We want to spread the doctrine by infusing it in others who can take it into other marketplaces.
That's great. And not to jump ahead, but if you think ahead to next year, like what would you, if you could accomplish one thing or see the industry accomplish one thing over the next year, what would that be?
I'll answer this, is that I think that the industry should embrace doing the hard things, which in our mind is if you focus on all of those stakeholder groups, the customer, the employee, the investor, and the community in which you operate, I think if you do that well, which I think is among the most difficult, I think it'll shift that focus of the industry to a bit of that longer term perspective. And I think that in turn will yield a much healthier industry where we're kind of all winning. And I think that that's a good environment to operate in.
I think if I could just separate the question into two pieces. On the industry front, I just encourage everybody out there not to fall too much in love with any fad. Technologies through my career have come and gone. Approaches have come and gone. Some sustain, and they may well have a material part of the future. But be careful of just the new lollipop, the exciting thing in town. On our own business front, without doubt, we're expecting to have had a phenomenal Boulder event. And if anybody out there is listening is interested, then go on to Transform 26 and register. We're limited for places now, but be delighted to have it. We see that as a great success. And by the time we're here next year, our first investments will have happened.
Josh Crum, CEO, Abex Technologies.
Well, one of the kind of funny comments and discussions at the actual 24/7 panel and event was one of the people that was there kind of representing the technology side. And they're like, well, yeah, even in the existing banks, our software doesn't really quit. It's the people, it's the operations that check out rather than the software. I think he made some anecdote. He's like, we can even see in the data, even the hackers take lunch. And that's really a 24/7 operation is people trying to hack you. And you can see it in the data that they went on lunch break. So at the end of the day, the systems, I think, are more and more being built and allow for these things. I think you even go back to when the markets moved to T+1 in the US. I think there was a lot of fear and a lot of nervousness. But again, it was really just an operational issue. The systems, the IT systems were really basically there.
And you've always been focused on commercial markets, commodities. Big part of the conversation this year, of course, has been prediction and event markets. What are your thoughts on the direction you see the exchanges going?
That's the big one that I think I alluded to at the beginning here. A lot of the futures markets started with that natural risk transfer, a farmer needing to sell crops before investing all of the capital in the planting and so forth. So, really, it's that mismatch, that traditional mismatch between I'm a producer and all of my revenue is tied to a top line, but my consumer maybe doesn't necessarily have that same risk threshold, particularly if you're an input commodity, then you're always passing that price along the supply chain. So the seller a lot of times is more exposed than the buyer to the actual price and volatility of the commodity. So that naturally needs the speculator, right? So a speculator that can be used with all sorts of negative connotations, but at the end of the day, that speculator is an important part of making a market, particularly when you have that risk mismatch. That's the purpose of the market. So ultimately, I think these prediction markets, that's kind of the nature of futures markets in many ways. However, what I don't like is just how much the
just the straight up gambling market is coming into regulated futures markets. And I think a lot of it's coming through the nature of these event type situations. And this is where, frankly, it makes my blood boil, that ultimately this is, in my view, this is not a market. That example or analogy I was using between the buyer, the seller, and the speculator, that is a proper risk transfer mechanism. What you see here with a lot of these gambling markets, these prediction markets, is this is just a big data operation. This is not a risk matching of buyers and sellers. It's a strip mining operation. You're going after the data, particularly of vulnerable retail consumers, and you're sitting there mining all their data, understanding their biases, and then feeding them the easiest way to bet on something you know they're going to lose. This is the house taking money. This is not a risk transfer mechanism, and I think it has no room in public markets. Or if it does, we got to take a long, hard look of what we're actually doing in these markets. So look, I'm not saying that events and the wisdom of crowds can't be useful, but it should not be a free-for-all, and I don't like some of the stuff I'm seeing.
One other thing that really didn't come up too much at the conference, but of course it's very important, it's been in the news lately, is the CFTC and critical minerals. What's happening there?
Yeah, so there was a very interesting comment by the CFTC chair in his keynote talking about the need for more markets in the US on critical minerals. And he particularly used the words physical delivery markets, physical markets, not just indexes based on foreign markets, which is essentially, if you look at a lot of the emerging commodity markets in battery raw materials, in even LNG, I think the incumbent market operators have been kind of falling back on just price assessments. And again, a lot of this happening outside of the US. And I think the CFTC chair and the administration is really focused on solving these problems and building local markets. So obviously we are a team that's well-versed in that, probably one of the only exchanges building physical delivery markets from scratch right now on a consistent basis. We have had conversations with the US administration, and we look to get involved in that more as well. And another really interesting thing that came out was around single stock futures. That was another conversation that was happening during the event, and something that we're looking at, particularly in a commodity context, that we think we can solve some of those problems as well. So kind of stay tuned for that. But it was very good to see that a lot of our themes that Abaxx is building for 6 or 7 years are really some of the key themes and the key initiatives, both of the US administration as well as our markets.
Thanks again to all of our guests and to the FIA for partnering with us at Boca 2026, the Global Cleared Markets Conference. We hope you enjoyed the episode. If you would like to listen to the full interviews, they're available on our website, smartermarkets.media, on the SmarterMarkets Presents media page. They're also available on our second podcast channel, SmarterMarkets Presents, available on all major podcast platforms. We'll be back next week with another special episode recorded in the podcast studio of the Nexus Ballroom at CERAWeek in Houston. We hope you'll join us.
This episode is brought to you in part by Abaxx Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter Markets are here. Contact sales at abaxx.exchange to get started. That concludes this week's episode of Smarter Markets by Abaxx. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abaxx Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.